Now, in this section, we're going to talk about the statement of cash flows, where we're looking at the cash and cash equivalent number right here. And we'll talk about how these numbers, how cash has changed from the beginning of the year to the end of the year. So let's see, cash at the beginning of the year or end of last year was $50,000 and now it's $160,000. How has it increased from 50 to 160? So in the statement of cash flows, we'll identify the sources and uses of cash. So from where has the cash come into the entity? And what did the entity do with the cash? So that is your statement of cash flows. And we're going to divide all the sources and uses into three categories. We're going to look at number one, operating activities. Number two, investing activities. And number three, financing activities. So let me put that all here and we'll discuss all this in detail. So we got the statement of cash flows. And we're looking at number one, operating activities. Then we would have investing activities. And we'll also have financing activities. Now, operating activities, that sounds like operations. So I'll give you a general thumb rule for you to understand how your cash flow relates to your balance sheet and your income statement. Now, it's not a watertight compartment, but it really helps you a lot of times. Whenever we are looking at items on the income statement, and that's for most of the items, not all. Most of the items on the income statement and on the current side of your balance sheet, current assets and current liabilities, most of such items go into operating activities. When I'm looking at the non-current side of your balance sheet, most of the items here go into investing activities. When I'm looking at non-current liabilities and equity, most of this is financing. So guys, now you know how to relate your statement of cash flows with your balance sheet income statement. These are not watertight, these are not rules, but these are good tips for you to understand the relation out here. So let's talk in detail. When we're looking at operating activities, we're looking at how has the cash come in and gone out on account of operations, business activities. So let's say we've sold goods, but we haven't yet collected the cash. Will it come on your statement of cash flows? No, not yet. We haven't seen the money. So we're going to have sales on your statement of cash flows only when cash is collected from your receivables. That's a source of cash. So we're going to look at cash collected on sales. Now let's say we've received some advances from our debtors, from our customers. Is that sales on your income statement yet? No. But is that a source on your statement of cash flows? Yes, it is. So guys, here we were looking at the accrual basis of accounting. Here we are more towards the cash basis of accounting. We're not concerned about whether we've earned it or not. We're concerned about have we touched the money, have we seen it, source of cash. Now, let's move down on our income statement. So we look at sales. Let's talk about COGS, cost of goods sold. So that's purchases. Now, you might have purchased goods from your vendors, not yet paid them the cash. So it's an expense here, but is it a cash outflow here? Not yet. It's a cash outflow only when you make payments to your vendors. So you could have payments for purchases. So when you're purchasing goods from your vendors, that's a payment. You could have payments for selling expenses. You might have incurred it. That's an expense. But here we're concerned about whether have you paid it out. Again, general and administrative. It's an expense on your income statement the moment you incur it. But here, it's an outflow only when cash goes out. So, G&A. Now moving down, so we've covered sales, got COGS, selling, G&A. Non-operating items. So what's non-operating income? When you receive interest, when you receive dividends, that's your non-operating income. So even that is part of your operations because you had surplus cash from your operations, you invested it out, investing activities, and then you made interest, you made dividends. So the interest received and dividend received, that goes in operating activities here. So I'm looking at interest received or dividend received. What's non-operating expense? A major one, interest expense. So that's a cash outflow. Guys, interest received, dividend received, cash inflow. Interest paid, cash outflow. Uses of cash. O&T. Taxes you paid out. Cash outflow, uses of cash. So guys, as you can understand, we've been looking at all the items on the income statement. A lot of this are related to your current assets and current liabilities. Your sales, that's related to accounts receivable here. Your purchases, that's related to accounts payable and inventory. You have selling G&A, again, that could be payables. You have interest received, dividend received, interest paid. So you could have accrual accounts. So let's say interest incurred, not yet paid out. That's a liability here. So tax incurred, not yet paid out, that's a liability here. Paid in advance could be an asset. So generally, we're looking at this, the top portion of your balance sheet. Now let's move on and talk about the next one, investing activities. Now, investment is something that you can make in others. If you find them attractive, invest in them. Or if you love yourself, invest in yourself. So all that is investing activities. So guys, how do you invest in others? By buying their stock, by buying their bonds. So that's how you invest in others. Maybe by giving them loans. So guys, when you're making loans to others, when you're investing in others, making investments, could be in stocks, in bonds. That's all investing activities. How can you invest in yourself? By buying equipment, by buying property, plant, by buying intangible assets. So all that is investment in yourself. Love yourself, investing activities. So PP&E, intangibles. So guys, understand here, investing in others. When you give out loans to others, that's a cash outflow. But when you collect back those loans, that's a cash inflow from investing. When you invest in stocks and bonds of others, that's a cash outflow from investing activities. But when you sell those investments, when you sell those stocks and bonds, that's a cash inflow again from investing activities. When you go out, shop for your PP&E, buy your PP&E, that's a cash outflow. You got to pay them out. But when you sell your PP&E, that's a cash inflow. Cash comes in. So we're looking at cash outflows and inflows from investing activities due to these items. Now, one thing that you need to remember is if you have a gain or loss on sale of investments, if you have a gain or loss on sale of PP&E, that doesn't go on operating activities. That comes in investing activities. So if you had a gain on sale of PP&E, that would be non-operating income here. But that is not operating activities. That comes in investing activities. So let me show you the journal entries. So let's say you went out, you shopped for PP&E. You bought PP&E worth $100,000. So you had PP&E debit 100 and cash went out 100. So is this cash inflow or cash outflow? Guys, cash has gone out. This is a cash outflow from investing activities. This is a cash outflow. Now, let's say you've used this equipment for a lot of years, and 7 years, let's say, and the current book value of this equipment is $30. And now you sell it for $40, gain of 10. So guys, cash coming in now. And this is cash inflow. You've sold this for, let's say, 40. But the book value was only 30. So that means PP&E would be credited 100 and there would be accumulated depreciation of